Congratulations on getting to this level. From here henceforth, I want you to keep practicing all you have learned so far. Let's quickly get into this. Different types of time frames are seconds, time frame, minute time frame, hourly time frame, daily time frame, weekly time frame, monthly time frame, and yearly time frame. In MT4 and MT5, we have M1, which is the 1-minute time frame, M5, which is the 5 minutes time frame, M15, which is the 15 minutes time frame, M30, which is the 30 minutes time frame, H1, which is the 1-hour time frame, H4, which is the 4-hour time frame, D1, which is the 1-day time frame, W1, which is the 1-week time frame, MN, which is the monthly time frame. Every larger time frame is the summary of the smaller time frame. What do I mean by this? For example, if we are watching the charts on an M1 time frame, we will be seeing a lot of candlesticks within a short period of time. This is where you will use your chart reading analysis. Candlesticks reading is barely useful on the M1 time frame because candlesticks are the summary of a whole chart. If you want to combine a chart pattern into a candlestick, you will convert it by changing the time frame into the next, higher time frame. Once this is done, you have here, by summarized, a smaller time frame. It is not rocket science. It's just common logic. Time frame for scalpers. When it comes to scalping, you can never ever in your entire life use a H4 time frame to scalp. What is scalping? Scalping is a method of trading that is done by placing a trade with a mindset of getting quick profits and targeting small pips. They are always done using smaller time frames, which are time frames from M15 downwards. This means when you are scalping, you will try using those support and resistance methods I taught you on shorter time frames. I want you to note that the lines will break faster in this case since the market moves faster in these time frames. I will never advise anyone to trade with this time frame because you might end up not profitable in the long run. Many traders enter the Forex market with a scalper's mindset. When you do this, it will make you impatient and you will tend to close your trades in loss most of the time because you will get scared when things move in the opposite direction so fast, and you might never know if the general trend is supposed to move in your own direction on the long run. This is why I always recommend that my student should firstly try Forex while looking at the bigger picture. What do I mean by looking at the bigger picture? I mean, you should trade Forex while using a larger time frame. It is best for every Forex trader to start developing his Forex mindset with a larger time frame. Use your analysis on larger time frames. Do everything on larger time frames. It will help you develop the right trading psychology. You will learn how to target big lips and not small pips. You will learn patience. You will learn discipline. You will love Forex more when you trade it from a larger point of view. I mean, you should trade Forex while using a larger time frame. It is best for every Forex trader to start developing his Forex mindset with a larger time frame. Use your analysis on larger time frames. Do everything on larger time frames. It will help you develop the right trading psychology. You will learn how to target big lips and not small pips. You will learn patience. You will learn discipline. You will love Forex more when you trade it from a larger point of view. The best time frame for non-scalpers are D1, H4, H1, M30, and M15. Time frame combinations. As a trader, you should not always trade with only one time frame. A chart might be telling you one thing in the larger time frame, and it will be telling you another thing in a smaller time frame. This is why the best way you trade is to analyze your trade on both larger and smaller time frames. How can you analyze in both? The larger time frames are used to check the general trend. You must check the general trend to see if the trend is reversing or still trending, and try bringing out your indicators on the general trend to see if it is getting oversold or overbought. All analysis must be done on larger time frames, while the shorter time frames must be used to check suitable entries. But this should be done when you have a confirmation candlestick. After you have seen your confirmation candlestick, you will then go into a smaller time frame to check out the chart pattern in that time frame to see if it is also a confirmation chart pattern. If everything correlates, then you will place your trade. That is what I call sweet entries. Remember I told you that a candlestick in a larger time frame summarizes a chart pattern in a smaller time frame. This means the combination of a chart pattern in a smaller time frame forms a candlestick in a larger time frame. Note, always use larger time frames to analyze and smaller time frames to check for suitable entries. What are the golden time frame combinations? 1. 1 min, all 5 min, 30 min for scalpers. 2. 5 min, 30 min, 4 RR for long-standing scalpers. 3. 15 min, 1 HAR, 4 R for non-scalpers that want to respect their TPs and SLs. 4. 4 R daily, weekly, swing traders. Note, the first time frame in numbers 1.23 and 4 above are used for entries. The last time frames in the numbers above are used for the analysis, while the middle time frames are used for extra analysis. What is the best time frame for you? This depends on the trader, but I recommend you use number 3 to start, and when you are good at Forex, promote yourself to using number 4. When you feel like playing around with the market with a huge lot size, then you can try using number 1 and 2. But only use number 1 and 2 when you have practiced your exclusively with the number 3. When you eventually become a guru, you can trade on any time frame, anytime during any trading day.